Jeremy Pate, Swan Energy.
Thank you very much for joining the program. Of course, Swan Energy, the 2020 Crude Life March Madness tournament winners. Thought I'd mention that to start off the tournament, as that was kind of a little bit of a distraction as we tried to figure out the COVID-19 shutdown and some of the coronavirus impacts. Jeremy, how do you pronounce your last name?
Pate.
Pate, right? P-A-T-E, Pate.
That's right.
Not
like
Pate.
No, not Pate.
You'll
get hung up on if you call and ask for Jeremy Pate.
Right, that's what I figured. I know you just host a lot of the Pate parties, whining and dining and profiling and styling, all the business you guys are doing and everything down there at Swan Energy. No, I joke. But in all seriousness, last time we spoke, Swan Energy was pretty aggressive looking at investing in the natural gas market. In fact, to where Brandon Davis, the CEO, came on this program and said, hey, we're buying natural gas leases. I just wanted to get a check-in to see how business is going, if you guys are still in the natural gas lease market. So, Jeremy, thank you for joining the program today, and here's your opportunity. What do you guys got going?
Yeah, so like Brandon mentioned the last time, we're using this time to really focus on growing our company. We are investing in natural gas acreage and natural gas plays and assets. We have closed one deal recently. I think back in May, we picked up 15,000 contiguous acres in Leon County with a few wells and a few producing wells on it. We're really looking forward to putting together a development program in that area to go in and drill some deep Cotton Valley and deep Bossier gas. We are actively participating and looking and negotiating deals as we speak. It's actually what I was doing right before I jumped on the phone here. Was evaluating another asset position in South Texas. So yeah, we're active and we're players in that market. It's been entertaining and it's been fun. It's been frustrating, and I guess it's been everything that oil and gas is on a daily basis. You still have the same old issue where the sellers and the buyers are really, really far apart on price, and you have to try and come together. And it doesn't always happen, and sometimes you have to walk that deal down the road. But we have had a little bit of success. We're excited about that, and we're looking forward to what the future can bring as far as new acquisitions.
Are you guys hearing some pushback from people or some dreams and wish lists, I guess? Because I know what you're saying. The reality doesn't necessarily meet what perspective is. And the reality is that the market's where it's at. And the mineral ownership certainly seems to be changing these days with a lot of different, the shut-in of the wells and a bunch of different things. So I could see where this opportunity is certainly getting listened to by a lot of people. What are some of the, I guess, obstacles that you guys are seeing?
Well, the price is obviously the number one biggest elephant in the room. When you go into a negotiation as the buyer, you have to look at it and evaluate it on as if nothing is ever going to change. So if I'm looking at a deal today, that means that I'm going to look at it as what I don't even know what oil price is today, 38, 37, 38. But I'm going to look at it as if I'm never going to get any more out of that well than $38 a barrel, And the sellers are going to, on the other side of it, are going to be like, oh, listen to EIA, they're projecting 42 next year. Our analysts say it's going to be 50. If you listen to so-and-so, it's going to be 65 by the end of next year. There's no intention or need for us to sell at a crazy, stupid low strip price. But that's that's the gap that you got to try and bridge and get in there. So far, we've only been able to bridge that gap one time out of three, and we're negotiating on a couple more right now and optimistic. But I think from our standpoint, we're gonna start changing our approach a little bit. And the first meeting we have with people, I think we're gonna nail down that barrelhead or that strip pricing negotiated deal right away in order not to waste anybody's time.
I might be asking a stupid question here, but I know there's a lot of companies that are, going through bankruptcies and restructuring and that sort of thing. Does that become an advantage or a disadvantage to you? Does that impact you guys at all in any way? I mean, I would think that, it would be, for somebody who's buying, it would be a buyer's market, but then I have no idea how any of that restructuring stuff works, if that actually becomes an obstacle. And for you guys, I don't know, it might not mean anything. I'm not even sure. I just thought I'd ask.
Well, there's a couple things there. Once they go into bankruptcy, you can't do anything with them, right, until they come out. So if a company's going into bankruptcy and you might have a chance to pick off some assets, right there before they get in. But a lot of times, if they've already decided they're going into bankruptcy, they're going to restructure their debt, and the time for you to pick up the assets is going to be when they come out. And they're going to be looking to shed some non-core assets, and pick up a little additional cash flow. There's also, you can always, if you know that these things are going to happen, like if I were to know that XYZ energy company has 500 wells and they're going to be filing bankruptcy, within the next couple weeks, I can always go in and make a stalking horse bid, which means I can submit my bid at the time they file, for those assets that I want. And then that can be approved by the court. So I'm pretty sure it goes something like that. I'm not an expert on it by any stretch of the imagination, but I'm fundamentally, I think that's kind of the way it works.
How about the rest of your guys' business? How's that doing? I know you guys are diversified. That's one of the nice things about Swan Energy is you guys, can. Well, it's by the numbers. I know that after talking to Brandon a few times, and that's what I find so interesting about a lot of these natural gas leases and things like that, because really it's numbers and it's not emotional. I know you guys are involved in other areas of the oil and gas, upstream, downstream, salmon stream, if you will. How's the other parts of your business?
So our waste injection and trucking company in Oklahoma, they're going through a lot of the ups and downs that similar to the other service providers. It's a dog-eat-dog world in that market, especially with trucking. These guys would probably, give away their kids just to get a few trucking jobs in a lot of scenarios. But they're kind of holding their own, and we're looking to make some changes there management-wise. So I recently reposted a job listing for a general manager or operations manager or something like that for up there in Oklahoma. So that's a good opportunity for all those that are out there, looking. Feel free to DM me on LinkedIn if you want a leg up to get your hat in that mix, and that comes straight from Tim Travis, our manager, our COO, who manages that group. So they're holding their own. As far as Oak Energy, the company that I've been tasked with building, we're holding our own. We have a couple different smaller acreage positions and asset positions in Matagorda and Leon, as I mentioned earlier. And right now we're holding our own. We're breaking even. I feel very confident that during this time we've reduced our costs, and that as we bolt on more additions from an asset, as we bolt on more assets to our portfolio, that we're going to be able to increase production and cash flow, and that company is going to be stable and solidified across the board. And as far as, the Swan exploration, where our non-op assets reside, that thing there is just a machine, man. It churns out money, with our partners, whether it be Crestone Peak, whether it be Noble or Great Western or Oxy or whoever we're partnered up with at the moment. That thing's just a cash cow, and so it's doing fairly well. I mean, obviously, all companies across the board have taken a hit in the revenue department, but we run kind of lean and mean over here at Swan, and Everybody has multiple jobs and tasks every week. And so, we're making it work. I feel very confident that, Swan and all of its subsidiaries are going to come out of this thing stronger and stronger and looking toward a bright future.
Was talking with my son's godfather the other day, a good friend of mine, and Sunday morning we were kind of having a chat, and he asked how business was doing, and I said, I'm not sinking, and I'm not necessarily out of the water. I'm not necessarily treading water either. I said, I'm just kind of floating right now with the flow, and I feel that's pretty good because I'm not losing money, but I'm not necessarily putting much away either. So that's, we'll call it a victory for right now. And he kind of chuckled and said, yeah, I agree. And, listening to what you were kind of saying, that's kind of the consensus for a lot of people out there is that if they can kind of hold their own right now, that is a true victory during these times.
Absolutely. Definitely strange times right now.
It really is.
Certainly, unprecedented across the board for every industry, for every economy, for every city, and every state in the United States. These are all unprecedented times, and this thing has been like nothing any of us have ever seen before, except for maybe people that were around in the 1900s or early 1900s that experienced the Spanish flu or even the whatever bubonic plague or whatever they had back then.
So summarizing here, natural gas leases, you guys are still buying them, looking to buy them, taking a look and seeing what's happening in the natural gas lease world. Give you kind of a final opportunity here, plug your business, what you guys are currently, looking for and everything along those lines. But I thought I'd lead in a little bit with the, I love the fact, to me, that's a top headline story. Somebody's looking at buying something. So that's, go, hear ye. Let's hear all about it.
Yeah. So, what we've really been focusing on is deal sizes anywhere from $5 million, or I'll even take it down a notch further, $0 or $1 all the way up to $50 million. And, we're interested in looking at, our main focus right now is natural gas. We really like that market. There's guys like Jerry Jones that have invested $1 billion year on year into the natural gas market, and through our analysis and through our due diligence of various properties, we understand why. We feel like natural gas has already been beat down, that it's posed to rebound as these oil wells have been shuttered. So has natural gas production, and we feel like it's poised to make a stronger performance back into the mainstream and be a player again. So right now, if there's anybody out there that wants to talk to some people that are sensible and needs to shed some of their assets to lighten up or get a little bit leaner, give us a call. We're willing to sit down and talk to you and see if we can't work out a deal. And we're looking to, really break wide open in 2021, drilling some wells and increasing production across our fields.